What's up, everyone? Today is November 8th. It's Monday. So first day of the trading week. I'm gonna be going over the couple of trades I took today. Ended the day green. Did take a couple of trades. And I really wanted to recap a lot of the trades I took. Because I think in this video I'm really gonna focus on the three aspects or the three results from trading. And I know I talk about it in almost every video, but all the trades I took today encompassed one of those three results, and those three results are either a big win, a small loss, or a small win. So let's get straight into it. I did take a couple of trades, so let's start off with the higher time frame, and I can go through essentially the higher time frames for every single trade I took. So let's see. So the first trade I took today was on LSID. Everybody knows that LSID caught momentum. It was kind of gapping up out of this area. It was very, very strong pre-market. I also saw extremely strong volume pre-market as well. So all of those things combined, I was looking at LSID for a break of pre-market high. It was the only level I had on watch. After that, I took Tesla. So with Tesla, Elon Musk said that he sold 10% of Tesla, so the stock got down on bad news. However, I had a bullish bias going into it because of this 1 hour demand, so I was looking for long plays. I'll go over the context of this a little bit more, but just keep in mind that we gapped down, we had demand, so I wanted to, take this either out of demand or wait for a flag and then continuation to the upside. What else did I take today? Tesla, LSID. I think that was it. Oh, I took a couple of trades on AMC. They weren't particularly good trades. I'm going to go over that. But essentially, I saw AMC coming with volume. I wanted to catch the break of this 44.16 level. But those were the three trades, or those were the three stocks that I traded, and now I'll go in depth and explain my analysis on each one. I believe I also took Airbnb. So yeah, Airbnb had this major level on the daily right here. And so, I took a flag pattern once we broke the level. I'll go now in depth and explain each one of these trades on a lower time frame now. So LSID, very, very standard stuff, was watching it right off of the open. You can't see it here, but we did have pre-market highs here. So my plan was pretty simple. Just wanted to catch the break of pre-market high. So entered my normal size here, scaled 2/3 at the top when I saw rejection at this 932 candle, and then sold the rest for break even. So this was a very, very standard trade. This is one of the trades in my playbook. Let me just go ahead and change the color. So green for entry, red for exits. So very, very standard play. LSID did end up moving higher. I will talk about this later, but the main thing was that we gapped up on very, very strong, I think it was news or something with delivery numbers. But nonetheless, Lucid did gap up. It had volume pre-market, and it has caught momentum on a higher time frame. So all of those things combined, I'm looking for a continuation play to the upside. So, I took my chance. I took the break of pre-market high. I scaled where I needed to scale. And then when it came back to my entry, I scaled the rest at break even. So this is an example of a small winning trade. Obviously, I would have wanted to catch this entire move up. And there was a good chance that this entire move up could have happened straight off of the open. The thing is, with the market, you will never know. The only thing you can do is properly manage your risk. And that's exactly what I did here. So this is an example of a small winning trade. Next, I took Airbnb. So I didn't catch this flag break because I was in Lucid, but very, very standard stuff. I waited for a strong push up. We had consolidation on the 1 minute. Took the break of this flag right here. Pushed up. At this point, since I did play one contract, it was an expensive contract. As soon as I saw rejection here, I should have taken it off for, I think, $1 gain on the contract. The only reason why is because I was just playing one. I just wanted the quick move. Obviously, I would have wanted continuation higher, but that's not always the case. But as soon as I started pulling back to my entry, just to be safe, I got out. So on this trade, I took a $5 loss. So I'm pretty sure I invested close to a grand on this, and I took a $5 loss. So this is an example of a very, very well risk managed loss. So, I accepted the fact that, the trade wasn't working out in my favor. So when the premiums pulled back to close to break even, I exited. So this is an example of a small losing trade. Obviously, I would have wanted Airbnb to, after breaking this major technical level on the daily, um, so after breaking this major technical level on the daily, breaking pre-market highs, flagging on a 1 minute and pushing up, I wanted a stronger push up. However, I did not get that. That's just trading. You want to catch these moves. Sometimes they don't happen. Sometimes you want a continuation, but again, the market is composed of infinite variables. You really don't know which ones are going to push and which ones are going to fail. So I accepted that. I accepted the fact that this was not going to be a big winner, and I stopped out where I needed to. So again, I showed you an example of a small winning trade and a small losing trade. So now in Tesla, I took 3 trades. In hindsight, I should have only taken 2, but that's kind of the reason why I make these videos. I want to be transparent with the losing trades, which are avoidable. I want to show you my winners as well. I kind of just want to document my entire journey. But with Tesla, I knew a lot of people would go short off the open because we gapped out on bad news. And if we didn't have this demand zone right here, I probably would have been one of those people, probably shorting below pre-market lows. But knowing that we have demand here, knowing that we have fresh 1 hour demand, I simply cannot go short. And this is the power of combining, technical levels, key levels, good risk management, supply and demand. I'm combining everything into one, and it's been working out very, very well. But my first trade, I tried catching the break of pre-market highs. I think anybody can spot the mistake here. This was very, very extended. I told myself that there was some consolidation here, but uh, you know, I really have to do a better job of accepting the fact that if a setup goes without me, I really just have to let it go. Tesla was a clear example of that. This could have easily broke pre-market highs, ran without me, but because it was extended, 4 green candles approaching the level, I should have just left this alone. But I entered here, and then I entered near the top, and then I exited on this red candle, and I'm pretty sure I took like a 15-20% loss on the contracts. These were very, very volatile. Again, this was a loss, a bigger loss than I wanted to, a bigger loss than I had planned for, and this was a trade that I could have avoided. But then all I did is I just waited for us to form some period of consolidation. Then my second trade was right here. At this 10:03 candle, when we broke the flag, I entered, and then as soon as we started pulling back in, that was my sign to exit. So, with Tesla, I have a more of a go quicker, get out mentality. This trade maybe lasted maybe like 30 seconds in total, but I gave it the chance, didn't go right away, so I exited, and I took a five I think I took like a 5 cent gain per contract. So again, very, very well risk managed, gave it the chance, didn't go right away, got out. And then my second trade was, I kind of wanted to catch the break of pre-market high, but the reason I entered at this 1175 area is because I saw something on the time and sales, or I saw something on the level 2. And on the level 2, I'm pretty sure I saw like a $267,000 sell limit at 1175. So I knew that if we got through 1175, we would have an explosive move. So then my next entry, let me just highlight this as green. And then, as soon as we started pulling back, exited for a small gain. But this was a big winner here, and this is what put me up, like through 250, $300 on a day. But essentially what I did is, again, I gave it the chance, just like how I gave this one the chance. There was really no difference between this trade at 10:03 and this trade at 10:06. The only major difference was that this one worked out and this one didn't. And there's really no way to predict that. And that's why I always say that I need to protect myself if it doesn't go right away. I need to control the risk, because then I can catch these big winners if they start moving in my favor. But again, I combined the level 2 analysis. I saw size at 1175, so I took the break right before 1175, got a nice move through pre-market high, scaled my first contract, and now that I'm clearly in a winning trade, I just because I'm scalping doesn't mean I can't catch these bigger moves. So I accepted the fact that there may be some consolidation, waited for the consolidation, and then scaled my last one right here. Again, if I played more contracts, I only played two. I invested like 1.2K in total. But if I had gone in with more size, then I would have held through this consolidation, sold some here, maybe sold some here. But the main thing is that I'm having a go quicker, get out mentality. But if the trade is moving in my favor, I can be a little bit lenient with my scale outs to catch these bigger moves. So that was Tesla. Last but not least, I took a couple of poor trades on AMC. The level was 44.2, so I should have taken maybe this flag break right here, but I was taking a couple of high day breakouts right here. Trades in this area right here are lower probability, and the major reason for that is because there's no technical levels backing it up. Trades right here are higher probability because there's technical levels backing it up, and you can see that by the increase in volume, increase in the thick bodied candles. So that's kind of a clear example of where you would use my levels. But just in general, I think I would have avoided AMC. If you just go to 5 minute, super extended, I really don't know why I took any trades on AMC. All of them could have been avoidable. But nonetheless, I want to document them. I want to talk about, I'm pretty sure like, because my risk was super tight, I'm pretty sure I think I literally lost like $8 on AMC on like four trades after commission. So losing $8 is nothing compared to like the 300 or 400 I made on Tesla. But it's not really just about the risk management. These were trades which I could have easily avoided. However, I still took them. But the trades that I could have avoided came from the fact that it was very very extended on a 5 minute, and on Tesla again it was very very extended on a 1 minute. So those were kind of all my trades. I kind of want to wrap this up, combining every single piece of analysis I used. So my new strategy, or like the tweaked version of my strategy, still uses these key levels. It still uses time and sales analysis, still uses level 2 analysis. I still use supply and demand to figure out major areas of selling and buying, price imbalances. I am still using the 5 minute because I'm still able to catch these bigger moves, like the move I caught on Tesla. I think the move I caught on Tesla was like a $20 move. So scalpers may have only got $2 or $3, but because I scaled, I was able to catch a bigger move. So I'm still able to catch these bigger moves because I trade on a 1 and 5 minute. But the main difference is I'm giving things more of a chance, but I'm also keeping my risk super, super tight. So if a trade does not go right away, I'm out almost immediately. And I've been seeing the results. They've been working out a lot better. So for now, I think this is what I'm going to stick to. But the good thing is that everything is starting to come together now. I'm not really changing anything. All I'm doing is I'm combining everything, combining the supply and demand, combining the levels, combining the psychology, risk management, volume analysis. So just combining these things, bits and pieces, and it has been working out very, very well. I got a couple of DMs asking me about indicators. Again, I'm not a fan of indicators at all. Don't use any indicators at all. Volume and price, reading the candle structures, reading momentum in real time through volume is really all I need. But if you have any questions, just hit me up on Discord, and that's where I'm most active, or just leave a comment in YouTube below, and I will do my best to get back to you.